So what did we do? Well, in the late 90s, we suckered the British into selling half their gold. They did at $250 an ounce, by the way. That was Gordon Brown was the Chancellor of the Exchequer. It's known as Brown's Bottom, but he did manage to sell the gold at the absolute. That's like a 60-year bottom. So nice job, Gordon Brown. Then in the early 2000s, we put pressure on the Swiss, and the Swiss sold 1,000 metric tons between 2000 and 2009. Finally, the Swiss rose up in a peaceful revolt and had a referendum, and the Swiss National Bank said, no mas, no mas, we're not selling any more gold, and they haven't. And we got the IMF to sell, I think, 400 tons in 2010. That's it. No more suckers. And so 2010 was the year the inversion took place where central banks became net buyers, and they've been net buyers ever since. And the buying is accelerating. Russia has quadrupled its gold reserves from 600, this is 15 years. Russia has gone from 600 tons to 3,000 tons. China, about the same, 600 tons to 3,000 tons that we know of. Could be much more. But also Iran, Turkey, Philippines, Kazakhstan, Mexico, Vietnam. If you go down to India, even Japan somehow pulled 300 tons, probably in the back room. But we've restated their gold reserves from 600 tons to 900 tons. This is all by weight, by the way. I'm not talking about dollar valuations. So what that does, if you're an investor, it's my favorite kind of trade. It's called an asymmetric trade. You have a kind of floor, no guarantee. But if central banks are buyers and continual buyers, and they don't try to gobble up all the gold in the world at once, the market's very liquid, but not that liquid. Russia is a good example. 10 tons a month, 20 tons a month. It's a little engine that could, but you do that for 15 years and you're going to get thousands of tons. But they kind of put a floor under things, which means you can buy. It doesn't go up the next day, but if the trend is up and there's a floor that keeps it from going down because the central banks come in and maintain the floor, that's a beautiful thing. And so that's one trend. Now the BRICS have accelerated that because they are in the process of they're doing a couple of things at once. They're coming up with their own currency, but very slowly. We might not see that for 10 years. People say, well, they can't do it and all that. Well, I remind them that the Maastricht Treaty was signed in 1992, and the euro was not available until 2000. The point being, that will take a while. But what is not taking a while, what is happening in real time, and a lot more progress at the BRICS Leaders Summit in Kazan, Russian Federation, that just took place a little over a month ago, is they've come up with their own payment system, and they're going to use their own currencies transacting in a closed circuit, meaning secure payment system. Russia will ship energy to China and get paid in yuan, and China will ship manufactured goods to Brazil and get paid in rice. And if you want to buy, if India wants to buy Embraer aircraft, et cetera, they'll pay in rupees.
Gold, often referred to as a barbarous relic, has consistently proven its worth as a strategic asset throughout history. While skeptics may scoff at its lack of yield or utility in modern finance, recent global trends show that gold is far from obsolete. Central banks, particularly those in emerging markets, are accumulating gold at record levels, and the BRICS nations are laying the groundwork for a financial system that challenges the hegemony of the US dollar. As Jim Rickards eloquently points out, this evolving landscape creates an asymmetric investment opportunity for those who understand the dynamics at play. Let's rewind to the late 1990s, a period when Western governments, under pressure or through sheer misjudgment, sold off massive quantities of gold. In what is infamously known as Brown's Bottom, Gordon Brown, then Chancellor of the Exchequer in the UK, sold nearly half of Britain's gold reserves at a rock-bottom price of $250 an ounce. It was a catastrophic financial decision, marking the lowest point for gold prices in decades. In the early 2000s, the Swiss followed suit, pressured to sell 1,000 metric tons of gold between 2000 and 2009. However, the Swiss eventually wised up. A referendum stopped further sales, and the Swiss National Bank firmly declared no more. Similarly, the International Monetary Fund, IMF, sold 400 tons of gold in 2010, marking the end of an era when Western institutions were the dominant sellers of gold. By 2010, the tide had turned, and central banks became net buyers of gold, a trend that continues to accelerate. Fast forward to today, and the picture has dramatically shifted. Emerging markets, particularly the BRICS nations, Brazil, Russia, India, China, and South Africa, are leading the charge in gold acquisitions. Over the past 15 years, Russia has increased its gold reserves from 600 tons to 3,000 tons. China has followed a similar trajectory, officially reporting 3,000 tons, although some experts believe their actual holdings are significantly higher. Countries like Turkey, Iran, India, and even Japan have also quietly bolstered their gold reserves. Why this rush for gold? For the BRICS nations, gold serves multiple purposes. De-dollarization. By accumulating gold, these nations reduce their dependence on the US dollar, which has long been the backbone of the global financial system. This strategy provides a hedge against dollar volatility and the geopolitical risks associated with holding US treasuries. Monetary sovereignty. Gold offers a way to settle international trade balances without relying on fiat currencies that are subject to manipulation or sanctions. Economic stability. In times of crisis, gold serves as a reliable store of value, providing a buffer against economic shocks. One of the most exciting developments within the BRICS bloc is the establishment of the BRICS Clear system, a new payment mechanism designed to bypass the dollar entirely. Under this system, member nations can trade goods and services using their local currencies. For example, Russia can sell energy to China in yuan, and China can sell manufactured goods to Brazil in reais. A central ledger keeps track of these transactions, and settlements occur on a net basis, potentially every quarter. Here's where gold becomes indispensable. In the absence of a unified BRICS currency, a project that may take a decade or more to materialize, gold serves as the coin of the realm. It provides a neutral, universally accepted medium for settling trade imbalances. For instance, if a net settlement requires physical payment, gold can be transported or its ownership transferred on paper. The beauty of this system lies in its simplicity and resilience. It reduces the need for trust in fiat currencies and offers a tangible, finite asset as the ultimate guarantor of value. In addition to the payment system, the BRICS nations are developing a commodities exchange that operates entirely outside the dollar system. This exchange will allow member countries to trade essential resources like oil, gas, and agricultural products using their local currencies or gold. By pricing commodities in non-dollar terms, the BRICS nations undermine the petrodollar system that has dominated global trade for decades. This move has profound implications. It not only diversifies global trade, but also strengthens the strategic importance of gold. In a world where currencies are increasingly viewed as liabilities rather than assets, gold stands out as the ultimate measure of value. The global financial system is at a crossroads. The dominance of the dollar is waning, and emerging markets are charting a new course centered around gold and silver. The BRICS nations are leading this charge, leveraging these precious metals to build a more resilient and equitable economic framework. For investors, the message is clear. Gold and silver are not relics of the past. They are the cornerstones of the future. By accumulating these assets, you are not only preserving your wealth, but also aligning yourself with the tectonic shifts shaping the global economy. As Jim Rickards wisely notes, this is a rare moment in history, a time when understanding the role of gold and silver can provide both financial security and significant returns. Whether through physical holdings, mining stocks, or ETFs, the opportunity is here. The question is, will you seize it?
So there'll be all these do tos and do froms. The way you handle it in the real world is you keep a ledger. Now the central bank comes in and pays all the sellers in local currency. And then they absorb the due from the trading partner on a central bank ledger. That's what this, it's called BRICS Clear. That's what this system will maintain. But the thing is, you can settle up on a net basis, not a gross basis. You don't have to settle up in real time. You can, but you can settle up quarterly, let's say. So a quarterly net settlement is not that onerous. And how can you do that? Gold. In other words, if in the absence of your own currency, your own BRICS currency, which is some years away, you can use gold as the coin of the realm, so to speak, and you can move it. You just put it on a plane and fly it around, but you don't have to. Again, as long as you have a ledger, I'll say, well, I'll clear all my debts to you in gold by weight. that would, and you can measure it in yuan or rubles or anything else. And it was interesting to note that along with this BRICS Clear system I just described, they're coming up with a commodities exchange. Again, it's all non-dollar denominated. There are no dollars in this whole system, but gold plays a very significant role because it is the only common currency of the at the moment 9 members.
As the global financial landscape evolves, gold and silver have re-emerged as indispensable assets for both nations and individual investors. The narrative is clear. The BRICS nations, along with other emerging economies, are forging a new economic order, challenging the dominance of the US dollar and reshaping how the world views wealth and value. In this context, gold and silver play pivotal roles, not just as stores of value, but as critical instruments of monetary sovereignty and economic stability. The BRICS nations have long recognized the vulnerabilities of relying on the US dollar for international trade and reserves. This reliance exposes them to the whims of US monetary policy sanctions and geopolitical pressures. To counter this, the BRICS have intensified their efforts to de-dollarize their economies. Central to this strategy is gold. The sheer scale of gold accumulation by the BRICS nations is staggering. Russia and China alone have increased their gold reserves from 600 tons to 3,000 tons each over the past 15 years. India, South Africa, and Brazil, while not as aggressive, have also steadily built their reserves. The BRICS nations understand that gold is not just a hedge against currency devaluation, it is a weapon in their arsenal to combat financial imperialism. But the importance of gold extends beyond individual nations. The BRICS development of the BRICS Clear system, a payment mechanism that bypasses the dollar entirely, is a game changer. By using gold as the ultimate settlement asset, the BRICS can create a stable and neutral foundation for their new financial system. This move effectively sidelines the dollar, reducing its influence in global trade and finance. One of the most significant challenges in creating a multipolar financial system is the lack of a unified currency. While the BRICS nations are working on developing their own common currency, this is a complex and time-consuming process. In the interim, gold serves as the ideal substitute. Gold's neutrality makes it a perfect fit for a system like the BRICS Clear. Unlike fiat currencies, gold is not subject to manipulation by any single nation. It is universally recognized and has a track record of maintaining value over millennia. For the BRICS, using gold for net settlement within their payment system ensures transparency and trust, two critical components of any successful financial framework. The establishment of a BRICS commodities exchange further reinforces the role of gold. This exchange, which operates entirely outside the dollar system, allows member nations to trade essential resources like oil, gas, and metals in their local currencies or gold. By pricing commodities in non-dollar terms, the BRICS not only weaken the petrodollar system, but also create a robust market where gold acts as a linchpin. While gold often takes the spotlight, silver is quietly carving out its niche as a vital asset in the new financial order. Known as poor man's gold, silver has a unique dual role. It is both a monetary metal and an industrial commodity, making it indispensable in the modern economy. Silver's industrial applications are expanding rapidly. From solar panels and electric vehicles to 5G technology and medical equipment, silver is a critical component in the technologies driving the global energy transition. The demand for silver is expected to outpace supply in the coming years, creating a compelling case for investment. The gold-to-silver ratio, a key indicator of relative value, is currently at historic highs. This suggests that silver is significantly undervalued compared to gold. As gold prices rise, silver is likely to outperform, offering investors even greater returns. For nations and investors alike, silver represents not just a hedge against inflation, but also a stake in the future of sustainable development. One of the most pressing issues facing the global economy is the unsustainable level of debt. From the United States to Europe to emerging markets, debt has ballooned to unprecedented levels. This debt burden, coupled with rising interest rates, poses a significant threat to economic stability. Gold and silver offer a way out. Unlike fiat currencies, which can be devalued through inflation or outright default, gold and silver retain their value. They are tangible assets that cannot be printed or manipulated. For nations burdened by debt, gold and silver provide a path to restore credibility and rebuild trust in their monetary systems. The BRICS nations understand this dynamic. By accumulating gold and integrating it into their financial systems, they are preparing for a world where fiat currencies may no longer hold the same sway. They are also positioning themselves to benefit from the inevitable revaluation of gold and silver, which many experts believe is long overdue. For individual investors, the actions of the BRICS and other central banks create a unique opportunity. As Jim Rickards points out, this is an asymmetric trade. The consistent buying by central banks creates a price floor for gold, reducing downside risk. At the same time, the long-term trend is undeniably upward, driven by the devaluation of fiat currencies and the increasing demand for gold in a multipolar world. Silver, too, offers an asymmetric advantage. Its current undervaluation relative to gold means that it has significant room for growth. For those willing to weather its volatility, silver can deliver outsized returns, particularly as industrial demand continues to rise. The key for investors is to focus on physical holdings. Gold and silver ETFs may offer convenience, but they lack the security and sovereignty of owning the physical metal. In a world where trust in financial institutions is waning, holding tangible assets is more important than ever. The world is undergoing a profound transformation. The unipolar financial system dominated by the US dollar is giving way to a more balanced, multipolar order. In this new paradigm, gold and silver are not relics of the past. They are the cornerstones of the future. The BRICS nations are leading this charge, leveraging these precious metals to build a more resilient and equitable economic framework. For individual investors, this represents a once-in-a-lifetime opportunity. By understanding the dynamics at play and taking action, you can not only protect your wealth but also position yourself for significant gains in the years to come. As we look ahead, one thing is clear. Gold and silver are not just assets. They are symbols of stability, sovereignty, and resilience. Whether you are a nation seeking to assert your independence or an investor looking to secure your financial future, the message is the same. The time to act is now.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.